You know that old expression, what goes up must come down? Well, that and the exact opposite are certainly relevant to index performance. The Wall Street Journal recently ran a story using a whole host of our indexes that highlighted this premise in tracking commodity prices' wild ride. Now let's take a look at this first chart. It shows the performance of the Dow Jones UBS Commodity Index over the past 12 months. As you can see, it's generally been trending downward since May of last year. This chart also shows the top and bottom performing single commodities over the past 12 months. Those were gold and wheat. Gold's been on a tear for some time, and its price rise comes from a confluence of factors, mainly anxiety about global economic and sovereign debt problems, investors using gold to hedge their portfolios, and even higher demand for it to make jewelry, especially coming out of the emerging markets. Now, wheat fell due to massive global inventories, and ironically, farmers grew wheat in abundance in 2011 because of high prices for wheat in previous years. Now let's take a look at December and January performance, and I think this will give you a sense of why commodities performance can induce whiplash. Here are a couple of December's poorest performing commodities, gold and zinc. Now, even though gold was the best performer over the past year, it fell 10.48% in December as the broader precious metals markets declined. But now look at its performance in January, up 10.88% due to a rise in the euro, which boosted the performance of our Dow Jones UBS Gold Index. In zinc, well, it was down 11.37% December as all industrial metals fell. Then comes January again, up almost 14% on good news from China's manufacturers and cautiously optimistic economic news in general. And now the other side of the coin. Corn was the best performer in the index in December, rising 6.33%, almost entirely on increased demand as a food and for ethanol. Similar story with soybean oil, which is very important in food production globally. It was up just over 5% in December. But high inventories cut returns on both of these indexes last month as they underperformed the broader market. Up, down, down and up, commodity index performance can change on a dime. And maybe that's why commodities index prices are among the most viewed sections of our website. And that's why you're watching this video. Thanks for tuning in. I'm Jamie Farmer for Dow Jones Indexes.